All right, can you guys hear me and see a screen? I got this on live chat, yeah. So that should be just a little delay. Let me get as much off the screen as I possibly can. Okay, now, okay. Guys, give me a mic check and a screen check, please. All right, cool. Just a heads up ahead of time. If I have any tech issues, something's going on my end. I apologize ahead of time, and if we do get interrupted, members, I'll shoot out, or maybe I'll just shoot out a video for everyone. I'll record on Zoom if I can't get through at least the early part of this. All right. Thank you, thank you, thank you. All right. Otherwise, it looks okay now. I didn't have any Zoom issues all day today. It just, for some reason, I had issue getting on here. I'm hoping it's not the steam room. That's what I'm hoping. All right, let me mute everything and let me just get through a few of the more important things that I wanted to share with you guys. Obviously, as we have our first real test
Fed Bank Term Funding Loan
for the since the post SIVB rally here.
16 after.
Okay. All right, so I got a little slide deck of I think two of the important things we're paying attention to here in regards to, I guess, the short term time frame picture and intermediate term, and basically how we really don't want to overanalyze because I think, again, seasonally we're at that time. Honestly, a lot of people talk about August. August is not even the biggest concern for me, as you guys know. I was getting into late August, September. It's not even a seasonality thing. It's just things tend to pop up, right? You get these negative headlines, you get these exogenous events. So I'm always on guard going into that time of year. But what we have here, and it's a good thing net, right? We've been talking about how we needed to see that rally and the bulls get tested because the longer we went without a test, the more risk we would incur by getting long into that strength anyway. So this is a good thing that this has shown up, okay? Now what we need to do is just analyze our, keep an eye on our signals here, try to elaborate what they're trying to tell us, and just keep time frames in mind. And I think a lot of people confuse time frames, right? Sometimes you see some stuff or short-term signals, and people like to extrapolate that into longer-term signals, right? So I think it's important to keep an eye on both time frames here. All right, so now that we've had a pretty nice rinse price action wise, right? We've come down, we've maybe stopped the bleeding for a day off a downside DeMark Niner that a lot of eyeballs were on, right? A lot of eyeballs were looking for to see if this market would find any support there. It didn't really find much, and the selling has continued. So this is as good as you can draw it up a test for the bulls, right? Because think of it logically. If it did stop there at the downside Niner and that was it, you're not really shaking out too many bulls, right? If anything, a lot of times what you'll see is you'll see a bounce and then the market will roll over from there, right? Kind of give bulls some hope and catch them. But it really didn't even give a chance to do that. So price action wise, we are oversold undoubtedly on a short-term basis, okay? Oversold doesn't always mean that it has to stop selling and turn, right? As many of you know, some of the worst corrections just get started into oversold signals, okay? So oversold is just telling you the price action has come in too much too quick, just based on price action, right? So what we like to look at are a couple things when we get the initial rinse, the initial selling off was a pretty strong bullish move, okay? And that's what I want to share with you guys. So this is one of the short-term sentiment signals we look at, right? And again, you try not to use this as an exact buy sell, just like anything else in this game, right? If you did, you probably make more money than not. But it's what's going on here? Oh, it's more of a compass, right? So I try to go back as far as I could so you could see where we're at in comparison to some prior turns we've seen in the market. Short-term sentiment was, right? So I went back, I think, to 2018 here. When you get under the 20 level there, is usually a range you start looking for those signs of a turn, right? So again, if you're Steamroom members, we like to look at sweeper activity, right, as one of our primary signals. So we're looking for some aggressive call buying to show up. A lot of times what I like to do, even before we see confirmation signals of a turn, I still want to pay attention to some of the selective buying out there, right? Some of the individual names that may start to see some buying, even though the major indexes haven't turned yet. Not to go too far off the map, but one issue over the past couple of days, the buying has really sucked. There's been kind of a drought of aggressive buying the past couple of days. That's not all that surprising because we really had some crowding into this prior rally, right? A lot of bullets were fired, a lot of ammo was fired, especially on a tactical basis, to where buyers kind of run dry in a sense, right? They probably would wait for more of a pull than just this to add, okay? So it's not all that surprising. So we're not getting any confirmation from sweepers that they are interested in any major turn. Okay, we're not seeing much of any speculative action or real buying on that matter. We'll touch on that again after we run through this. Okay, but once you get below that 20, that's where we kind of like want to start paying attention, and then down under the 10, a lot of times, as you can see, that's where things have a tendency to snap back pretty quick, more than not. And we might be there by the end of the night tonight when this updates. Okay, so the point I'm getting across is on a short-term basis, sentiment is where you want it to be, right? Flashing green. And that's kind of obvious too, right? With the price action we've seen. What also we like to look at alongside sentiment is breadth, right? And what I mean by breadth, everything, we want to look at everything as on a risk reward basis, right? In this game, odds and a risk reward basis. If you're trying to determine whether a snapback entry is worth it, right? Is the reward worth the risk? I like to look at breadth as a measure of how strong of a snapback we may see when it arrives, right? So even if you are a little bit early, if you're trying to front run that entry, and you are a little early, you want to give yourself some room, right? That reward, when that snapback does show up, it usually would be rewarding if you get some strong breadth washout signals with it, okay? This is a short-term measure we like to look at of breadth, right? We call it washout signals. And as you can see, we might be there today, hopefully. I don't know, breadth actually, I think, was better overall for most of the day today than yesterday. So I'm not sure if we're there yet, but we're pretty close, okay? And as you can see on some of these prior signals in the past, this doesn't mean bottom. A lot of times you get a snapback rally for a day or two, okay? Again, it's pretty strong, so it's worth participating in. But this is by no means uh, a major bottom signal. Okay? Again, I started off with short term, more tactical signals, and then we'll get into some of the more intermediate term. Okay? So again, this is getting close, right? Here's another one. This is just S&P 500 names above a 10-week moving average, right? A lot of people look at some of the longer ones. This is more short term. Again, getting there, right? We've been obviously more washed out, especially in the bear market of 2022. But as you can see, right, getting to an area where you usually see a snapback. Now, if you are a believer that this is a new bull market, and I know a lot of people out there who I've had to dispute an argument with are, very rarely are you going to get everything you want to see in a pullback if it's a new bull market, right? So if you're a believer of that, you may want to front run a lot of this stuff. If you're not, you're probably like I am. You're probably the prudent way to go is to wait for confirmation from a lot of these things. All right. So the point I was trying to make there, on a more tactical basis, on a short-term time frame, all right, to see that snapback 1 day, 2 day rally that's got some pretty decent gusto behind it. A lot of stuff is there. Okay, a lot of stuff is there already. Again, we don't have confirmation from what we like to look at, sweeper activity, but if you look at whatever it is you look at, I know a lot of people may not be Steamroom members, whatever confirmation signals you guys like to look at, that's what you would be paying attention to here, okay? Now I want to move into more of an intermediate time frame, because that's where the bad news is, right? The good news is we are already set up for a tactical snapback rally, okay? The not so good news is what I'm going to get into here, right? On an intermediate term basis, this is one of the washout signals we like to pay attention to, right? You saw the short term one. This is more intermediate term. You could see going in the right direction, but obviously not quite there yet. Okay, you can see some major spikes to signal, and this is more of a multi-day snapback squeeze than just the more tactical 1 day or 2 day squeeze. Okay, this is breadth as well, right? This is one of the more popular ones that a lot of you guys probably follow as well. Names trading above the 50-day moving average. Same thing, you can see halfway through, we got some more work to do, but not quite there yet, right? Oh, I'm on the next page here. Now, here is, we're going to get into some of the more important stuff, aside from a squeeze, to what we're really paying attention to here. We talk about the big picture credit signals, right? We want to know in the backdrop, is there something bigger behind the scenes going on that we should be concerned about behind this selling as of yet to this point? Or is this just normal selling after a strong bull move where a lot of people flip bullish, right? So far to the point of that, we're not seeing anything major, right? Aside from rates boogieing a little bit to the upside and bonds looking like shit, we're not seeing any flashing red or caution signals from some of the things we like to look at, right? Spreads and swaps, that sort of thing. We're seeing normal tightening as we discussed in prior webinars, right? We talked about how the inevitable is after that rally, we're going to go into a period where financial conditions start to tighten a bit, okay? We were multi-week period where financial conditions continue to loosen and ease, hence why the market seemed like it was going higher every day. So we have entered a period now where financial conditions have been tightening. Nothing too dramatic, but they have been tightening. But as you can see, not aggressively, right? So it's not something that, in other words, we want to hide in our bunker and wait for it to resolve type thing. We want to still pay attention, look for sweeper buying, right? Look for turns, that sort of thing. So that's important, obviously, and I wanted to share that with you guys. So that was swaps. These are credit spreads. Same thing, right? They have been widening out, but nothing too aggressive, right? And you've seen it. Even after the summer and the October lows, you get these ebb and flows where you go from financial conditions tightening to loosening, right? So totally normal. The difference is if you're not getting that aggressive blowout in these credit signals, the pullback eventually becomes a solid opportunity to get long, right? So that's the difference, and that's why it's important to pay attention to this stuff. So again, good news as far as the big picture scenario. Here's the bad news, and I think this, to me, and you guys know, some may think I'm a conspiracy theorist when it comes to this positioning shit, but I think this is the major problem right now. Why we haven't seen, one of the reasons we haven't seen a snapback squeeze yet. Okay? And what this is showing is our hedge funds and individual names, okay, that they went from, not really looking to participate in the up move, right? If you remember, they were short futures up to their eyeballs into the SIVB demise, right? Then as we've rallied, they added to that short future position, and individual names, they just never got excited as the market just went against them, okay? They have, at least trying to take advantage of this initial pullback by adding exposure in individual names. That's what this is telling us. That spike here is telling us that hedge funds got aggressive into that initial weakness and got long single names. Again, not one hedge fund, not Tepper, not Drunken Miller. As a whole, overall positioning, okay, hedge funds got aggressively net long in single names into the initial rinse, into this initial pullback. Okay? So, again, it's not an exact answer of what has to happen when we see things like this, but obviously we would like to see the opposite of that, right? You want to see hedge funds get short, possibly into weakness, right? Again, what they did into the SIVB news, right? Or even stay stagnant. The last thing you want to see is hedge funds jump in, get aggressive, and buy that initial dip, because what happens is if they get caught and they realize they get caught, okay, that selling will feed into what's already a bad liquidity environment with bearish price action, right? And you can see in the past, again, it doesn't always mean crash, but when they decide, oh, we don't want to get long, okay, let's get long now, we got the opportunity, a lot of times it backfires in their face. Okay? Not always, but a lot of times. So this is one of the concerns, right? And for me, again, I have no factual information to back it up, but one of the reasons I think we haven't seen a snapback rally of any strength, of any big measure yet. Okay. On top of that, and I forgot to post these things, but we've talked about it ad nauseum, so you guys remember. Remember, we talk about the systematic funds, right? You have the CTAs, which basically they're just trend followers, no emotion, they just follow trend, right? And you got vol control funds that basically trade off the VIX. Okay, if the VIX sells, they add long exposure to the S&P 500. Okay, if the VIX spikes or sustains a rally, they will sell S&P 500 futures. There is no thought process behind it. That's why they're in that camp labeled systematic traders, right? They were the first ones to really believe in this post-SIVB rally, right? The first camp to get involved right, to get all in on the bullish side were CTAs and obviously the VIX control funds as VIX was selling off. Okay? They've been sitting on a shitload of long exposure for a while now. And if you remember, we spent some time talking about how it's not a concern, that we don't need to worry about that crowd being extremely long while the market continues to go higher. Where it becomes a problem is when the equity markets start to sell off and you get sustained strength in the VIX, right? Because again, VIX trades higher, right? VIX crosses above 17, they take down their long exposure, right? It stays above that level for a certain amount of time, they take down their long exposure some more. If it crosses 18, 19, 20, whatever levels they're looking at, right? You see Mick Elliott talk about this stuff continuously in regards to these levels, okay? So that adding heavy supply into the equity market and hedge funds buying that initial dip, I think is the major issue here, right? How big of an issue can it become from this point on? Who the hell knows? But that is in the way for what's already set up as a pretty decent tactical entry spot based off price action and tactical sentiment and that sort of thing. Okay? So that's the negative. On top of that, we have in the futures market, as you guys know, you always ask for updates on what they're doing. Sharpies, hedge funds, and the riffraff specs in the futures market, right? What we had, let me pull up the Sharpie chart because I think that tells it best. Sharpies here into the SIVB pullback got aggressive, right? One of the few camps to get aggressively long into that SIVB crash. And they've added long as hedge funds and retail didn't want to believe in the rally, right? Hedge funds were betting against the rally. Sharpies continue to add exposure into that rally. Okay, the last few weeks, as you guys know, if you've been on the weekly webinar here, they've been reducing exposure. As you can see here, they've taken down that whole SIVB aggressive add post SIVB. That's completely washed out now. Okay, so they are still long, but they are selling, and that's what this indicator, where the hell am I? Hold on. That's what this indicator shows here. This measures what Sharpies are doing on a more recent basis in comparison to their overall activity. And as you can see, this is almost at a sell signal for this indicator. What it indicates is that most recent Sharpies have been aggressively selling. Okay, not that they're already short, but what they're doing currently, and they're in the process of aggressively selling. Okay, so think about where we're at now. If you were to put all this stuff together, what is this? I keep doing it. Put all this stuff together, try to make sense out of it. Tactically, right, the setup is already there for a snapback squeeze. I still think we can see a pretty healthy snapback squeeze, right? Just an overall oversold and short-term sentiment squeeze, just that. But you would want to see confirmation if you're looking to take a more conservative approach. If you're not, right? If you're looking to be a little more aggressive, or you're looking to even just take a flyer here, you could definitely try to front run the signal. You're there right now. You're already there. Okay, what's the risk? The risk is you don't get the snapback squeeze and you lose your money, right? I mean, it's a loser, just like anything else. But the setup is there if you were looking to front run some of those confirmation signals for that snapback squeeze. That if and when it shows up, the reward should bail you out from this point on a short-term basis. Okay? As far as confirmation signals, I've been talking about them, the past week, mostly the past few days here. What I like to look at, obviously, sweeper activity. I also like to play off what some of the credit signals we look at on an intraday basis are doing, right? A lot of times the strong upside moves, the strong squeezes will be confirmed by the credit markets. Right? Again, even if it's just a short-term thing, a lot of times you'll see credit spreads confirm that the squeeze is in play. When they don't, a lot of times those rallies fail pretty quickly. And as you guys know, I've been pointing out in the room, if you've been paying attention, there has not one bounce was even close to being confirmed from credit. Let alone forget sweepers, right? The sweeper activity has been pretty abysmal. And again, I don't think it's that shocking. I'm not shocked by it. But there certainly hasn't been much of any confirmation from sweeper activity. So those are the things I like to focus on. And because here's the difference, right? And here's the risk of the two. If you're taking my approach and waiting for the confirmation, it's much less risk, right? Because you have confirmation from sweepers and credit that the squeeze is in play. There's a high probability that squeeze is going to be a healthy one and you're going to make some money on the long side, okay? The risk is that you wake up the next morning and you have a gap and go type of situation. There's economic data or whatever it may be. Good earnings. We're still in earnings season. The markets gap up, right? Ding, ding, ding. Opening bell. Sweepers come off the bell aggressive. Credit confirms the rally off the bell immediately. And you're chasing that move higher. Now, depending on how large of a gap up, obviously is going to determine how comfortable you may be chasing that rally. Okay, but that's the risk. And I'm telling you from experience, that's happened to me way too many times. I've had to navigate and deal with that. All right, because especially now at my point in my career, I've been taking more of the more conservative route rather than front-running tactical signals. I kind of wait and try to catch that entry intraday because I can manage my risk obviously a lot better, right? There really isn't a lot of risk if you try to catch that entry intraday, right? You can play stops, and overnight, your stops are useless. So that's the difference. So it depends on you as a player in this game, right? And nobody knows yourself better than you do. How aggressive you want to be or how, conservative or prudent you may want to be. And taking all the other things into account that you look at or pay attention to that mean something to you should also go into the equation, right? Like for me, for example, let's say, for example, credit wasn't confirming it, but sweepers were legging into some things, right? Even though the markets didn't turn yet, I'm really seeing some promise on the sweeper side. Then maybe I'll decide to front run it, right? If hedge funds weren't buying the dip here and they were short, right? Maybe I decide, all right, now might be a good spot to front run that signal. So for me, with hedge funds buying the dip and Sharpies selling, right, in the midst of selling, my opinion for myself, I think the better way to go is to try and catch it intraday and manage it that way. Right? But again, everybody is different, and you should be able to make those decisions for yourself and not listen to anybody. It's foolish to listen to anybody on that front. All right. So that's the major distinction between the two, waiting for the confirmation signals and not. Right? And that's it. And that's it basically. If you remember, I was kind of excited the past couple of weeks. I really felt that we were going into a period where things will matter more, right? It's time to pay attention. Like we were in a multi-week phase where the markets were just going up, sweepers were buying everything was already bought, everybody was flipping bullish. You know what I mean? We weren't getting any important intel from any of our signals or the market or the price action, right? I felt we were just in a lull where things were going to stay bullish until we ran into that test. So I'm excited that now I think each and every day, each and every week, we're going to get even that much more information that ultimately I think is going to tell us where this monster may be heading more over an intermediate term horizon. Right? And again, we're going to get a lot of answers to all the debates where people were talking out of their ass, really just based off hunches or what they were calling. Right? Is this a new bull market? Is it not a bull market? Is AI for real? These stocks will go up every day, never come down. Right? Just keep buying them. So now, whenever the bulls do show up, the real bulls will show up. That's for sure. So I'm excited about that, right? And that's the bottom line. So that's the bottom line. Tactically, we're set up for a snapback squeeze. We could come in tomorrow off the open, and it can be lit up, and we could get that underway. But more of an intermediate term, it's going to be interesting to see how a lot of this stuff shakes out as we enter a pretty interesting month and a half seasonally. That could get dicey. Anybody have any questions, especially anybody who's a member? We've gone over it several times. But anybody have any questions on any of this? On any of these signals, or anybody having issue understanding any of this stuff as far as navigating or figuring out the risk reward and anything like that? Right, pretty understandable. So that's the scoop. Hedge funds, by the way, in the futures market, hedge funds have been covering that short position. They are still short, but they have been covering that short position. Again, we get another update tomorrow, and it's going to be really interesting to see what Sharpies do again into some more weakness. All right? And that's the thing here too. I mean, some of the people I know are really waiting for that as possibly the next strong setup. Is once this market pulls, shakes out enough bulls, when do Sharpies pull the trigger and add along? So you almost want Sharpies to take down exposure again this week, right? And then it's almost like a nice reset into this pull to see where they step back in. No? What do you guys think? What do you guys have been doing anyway? Let's talk names. I want to talk names anyway. In the time being, I like to talk names. You guys know I always like to talk names, but especially when you're kind of in wait and see mode, and kind of want to build a watch list of maybe names to look at, eye off pullbacks. Anybody itching to buy anything yet? As far as individual names are concerned, where the hell's my coffee? A net. Let's see, that was a big mover, right? Oh my God, this thing didn't even pull back. Unbelievable. Didn't even pull back. And they reported, right, Shank? That's a good observation on your part, right? Look at that relative strength. No sellers in this thing. Wow. Interesting. Interesting. And we see sleeper activity time to time, as you know, Shank, in the name. Really interesting. Khalid, what are you talking about? According to my Twitter feed, everyone's due for their stocks to bounce. Really? That's what the read you're getting from Twitter? Seriously? That almost goes along with the hedge fund dip buying situation. God, that's not what you want to hear. But yeah, listen, what's going on now is perfect just to that point, right, Khalid? Like, you didn't want this to be too easy. You know, you didn't want it to be too easy where you have a couple straight down days, everybody buys the dip, right? We're in a new bull market, make your own money. And if I had a checklist of what we wanted to see happen, right, as that gut check we were talking about, there are quite a few things I checked off. SMCI PLTR going down off earnings was the top of my list, right? That was right up there, top 3 of my list. That happened. Again, just early dip buyers, aggressive dip buyers getting burnt, where that you could check off. Yeah, some of the big names finally getting punched in the jaw, right? And you like these things they've had big moves, don't get me wrong, but you've had pretty decent pullbacks in these things where it wouldn't have shocked me to see bounces, right? It kind of shocks me that some of these things haven't bounced yet, but I like it. That's what I want to see, That makes me happy. You guys know that. I'd rather see, like Shank is pointing out, a name like an Annette hold up well, and Apple, can't find a bid, like that sort of thing. So yeah, Nvidia, it's on its own all by itself, but it didn't report yet, right? So we'll see how that goes. Didn't report yet. But like the whole AI theme is almost like wrapped up into Nvidia. Right? It's like the whole AI complex right now. And I don't, it's not that I'm even, you guys know my take on these things. They don't excite me. They just don't excite me. There's a period of maybe a week where maybe I get a little excited when they're catching action initially and they start to move. But once everyone starts talking about them and that's all they talk about. I can't, you need them to go dead. Otherwise people get bullish too quick. Yeah, Nvidia really helped the market last quarter. Now, again, Khalib, you asked me, I think SIVB failing was the bull savior. Honestly, that's what I think. I think without SIVB going under, we don't get that bull move that followed. You can't talk me out of that thesis because I'm 100% sold on it. And what's interesting now is, you got rates creeping higher, and then, that could be the concern that, is anything else going to break? Maybe something else breaks, and the Fed and the Treasury have to do something about it again, right? And then you got a blueprint set up as we had in the SIVB shit. Yeah, listen, rates on it by itself, I agree with you, Sahil. Rates on it by itself, I don't think are a main issue, but if you have financial conditions tightening, which includes all the other stuff we look at, spreads and swaps and everything else, equities aren't going to find any upside momentum at all. Doesn't mean they have to crash, but they're going to have trouble. I agree with you. Yeah, especially tech. Now, as far as flow, right, and I don't like to even bring it up too much because I know a lot of people you guys are in my camp where you're not big energy fans. The only buying we've seen realistically, that the buying that we're impressed by has been in energy names. That's it. There some of the other more cyclical names saw some action, but the oohing and ahhing from the flow has been mostly energy stuff. You know, that's not a bullish sign. Obviously, we want to see more involved, a lot more involved in energy. That's not going to be a bullish situation, but that's what we've had so far. And maybe we need a little bit more weakness, or maybe it's time, whatever it may be, before these buyers show up in other things. They will. At some point, they will. We might need lower prices, but at some point, they're going to show up. So we'll see. But remember what we were talking about coming into the last couple of weeks here, right? What we were trying to stay focused on. You really want to kind of put the blinkers on, as they say in horse racing, the blinders on, right? Really not have much of a bias. And you may have something you're looking for or to that effect, but you really want to have an open mind and let the flow do the talking. For me, that's where I want to be. That's where I want to be. Like, see, even right now, with Sharpies, in the midst of Sharpie selling and hedge fund buying, obviously not ideal. Very easily, like in the past, I could zone out and say, you know what? I'm not interested in anything here while this is going on. Once it turns, then I'll start looking. I don't even want to do that, because what I want to do is I want to pay attention to, even if it's early buying, to where it might show up. Early clues. Right? Maybe it's in underbelly tech. Maybe it's in, the cyclical names, the industrial names. I told you guys, coming out of this earnings season, I really had no idea where it may show up. No clue. Like, you could have made an argument for anything. And very easily, you could have made the argument, like Sahil, you and I have been talking about the last few weeks. You can make the argument that everything needed to breathe, right? At least a little bit. Everything needed a little breather. So we got that. That's a good thing. Been selling calls, yeah. Well, this is the time to do it, right? This is the time to do it. We've been seeing some of that too in the flow. Some call writing. So if that's your game, definitely an option. Definitely an option here. Definitely an option. But really, outside of energy, and you guys know the energy names. I mean, you could watch them on pullbacks. Still, see if they continue to buy them. These guys. This one ripped hard, MPC. So you might need a little breather here, for crying out loud. This thing. Really strong run. Give me a soon. Honestly, you're joking. That's what I want so bad. You don't understand. That's what I want so bad. Because that's easy for me. Yeah, that's the easy part for me. I don't have to worry about, a new leaders, bull market. Oh, it's an energy stock. Just give me a little hidden gem that sees some nice action that nobody knows about, and I'll build a nice little position longer term, and it'll keep me interested. I'll be totally into it. I need that. I'm due for that. I agree with you. I definitely agree with you. And what's funny? I've been looking even for, the unusual activity list, just to get my eyeballs on something. I can't find anything. Yeah, honestly, listen, you can make the argument that this is in play again. It's seeing some action again. If you like the name, you can make the argument. But I kind of want, and what Yaya and I are talking about, we want EOSE when we first saw EOSE. You understand? And you see the difference too now, even with the flow, right? You see, like it catches action, but it's rolling. You gotta wait for open interest changes, OI changes the next day to confirm. I hate that shit. I don't like that shit. I'll be honest with you. I don't know why. I never feel as comfortable. I never have the conviction. I can't explain it. I like when I see the buying and nobody else knows about it, you know. I like when sweepers become all of open interest. That's what I love. You know, because it's almost like I can follow it. You understand? I know exactly what's going on in the flow. Those are my favorite. When sweepers become all of open interest initially. That is my favorite. So that's kind of what Yaya and I are talking about. We want to find something that sweepers become all of open interest. You know? Kind of like we've seen LI was one, right? LI recently. Well, that was longer term, the leaps, but I don't care. I'll let them buy leaps in a little guy. I'll buy it. LPOOI. Look at Steven the Degenerate. I should have known he loves these little guys. LPOOI. Is that a new generation like LOL type thing I don't know about? And I'm typing in the symbol. Oh! Holy shit! I can't anymore. Largest position of open interest. You're 100% right, Steven. You're 100% right. What Steven's talking about is when action comes in and I post sweepers just opened the largest position of open interest. You know what I mean? That's usually those of us who like to look for the hidden gems get excited about. And let me tell you something, okay? In a new legitimate bull market, again, you're going to have a good amount of those. I'm sorry. You are. Right? You're not going to have that when they're buying Oracle or Microsoft. That's never going to happen. You know, but in a new risk-on, new growth bull market, you're going to have a lot of those largest position of open interest. All those post-COVID names, it applied to all of them. Net, SE, all of them. So that's the beauty of it. I see a couple of you guys talking. Sting, listen, see, and this is, there you go. You know when we're talking about Sting leaps, there's not too much on the floor to talk about. That's the CEO there. I'm not even exaggerating. That's the CEO. Okay? So they're buying leaps again, 2025. The problem is there's rolling involved too. So they're rolling, he's rolling a position, closing a position and rolling up in Sting. So there's some rolling involved, but yeah, you got leaps in this thing again. Yeah, you guys saw it. Even though there's some rolling involved, they put it on the top bet list. There was literally nothing. No, forget about accumulation. I put on the top bet list even bets that, caught one decent sweep. I don't even remember them right now, but Sting was one of them. Yeah, NPC, I think you probably, it's probably prudent to wait for a little digestion here. This one looks a little bit better because it didn't rip as hard. Ideally, if you could get a down day on it, they look good. They're energy stocks. They look good. I wouldn't. Me personally, I'm not going to go too crazy energy. I'm lucky if I buy one energy stock if I love them. I can't buy a basket of energy stocks. And it's tricky. I probably shouldn't put or even rack my brain, but I can't understand the commodity argument right now. I just don't get it. Maybe you guys can explain it to me. If you're bullish, if you're bullish commodities, that means you got to be bullish inflation, correct? You can't you can't think inflation is going to roll over hard and the Fed's going to cut rates and you're bullish commodities here, can you? I don't know, man. I don't know. That's why I hate commodities and stuff like that. I don't want to waste my time racking my brain about this shit because it's not like I'm going to get it right anyway. Yeah, you're right, Sahil. It feels good when you're doing the right thing by sitting on your hands and it goes lower, especially. But at the same time, it doesn't feel good when you're sitting on your hands and it rips away from you. I'll tell you that much. Oil's been strong, I know. And that's part of the problem. You got to rely on the commodity. I hate that. You know what it's like too, Martin? It's like the gold miners, right? Are the gold miners going to trade well if gold is soft? Probably not, right? I don't like that stuff. You know, you almost can make the argument like, why even trade the stocks? You better off trading the commodity, right? Or ETFs. Even some of you point that out, right? It's probably the safer route anyway. I know, Martin. I'm telling you, I'm being dead straight with you. I am so confused with unsure. Commodities don't make sense to me right now at all. I get both the bullish and bearish case, but I don't even have an opinion on whether the bullish or bearish case plays out. Like, what am I going to try to figure out all this whole macro inflation shit on top of everything else? That's why there's nothing better than one, growth when it's in favor, and when you got a legit bull market, right? A legitimate risk on bull market, you don't pay attention to any of that shit. Nothing. Nothing. Good looking sweeper activity, nice spot, buy it, look to sell it higher, case closed. You know? When you're dealing with an environment like we're dealing with, you know, the majority of the time, up until the last couple of weeks, pretty much, post SIVB, it becomes a lot more difficult. You know, playing the rotations, because if you need to play the rotations to make money, you're gonna have to deal with times like this, right? Where you can't play growth. It's out of favor. They're not buying it, not catching much any flow. So you got to look elsewhere, and it might be energy or gold miners and shit like that. But you guys brought up a good point, I think, on last week's webinar. You're probably better off playing the ETF if you're going to play these rotations. If you want to take a little safer route, right? Yeah, me too, Martin. I'm not afraid to admit it. Completely confused. I think some of the smartest minds out there. I hear from the most reputable people out there, okay? One dude could be like, inflation's going to roll over hard and crash. And they got 100%, you know, as much conviction as they could possibly have, which I don't understand how, but they do. And then there's somebody just as reputable, just as intelligent, just as much experience, who makes the case that we're in a new era, a new environment. Inflation is stickier, right? Rates remain higher, and you're dealing with that backdrop. Kind of like Druckenmiller, right? So it goes to show you how confusing of a time it is, that the macro shit. Yeah, great point, Casey. And it goes to show you too, all right? Right there's a perfect example, kind of what Casey's saying. If you are going to rely on that, figuring that stuff out to make money in this game, forget it. let me save you time, give it up. Right? I don't mean to be rude, but I'm being dead straight with you guys. Give it up. It's fun to handicap that stuff. It's interesting to talk about, but in regards to making money, net consistency in this game, forget it. I don't know about you guys, but a lot of times my best trades end up making no sense. No sense. The God's honest truth. Even on an individual name level, some of my biggest winners are names that I didn't even realize what they did until I was ready to sell it. Like I didn't understand the business model or anything like that. A lot of times when I get wrapped up into something I really like, it ends up being a loser. A perfect example, again, we talk about that name all the time. It comes up in conversation, SE. Right? I told you guys the story. While I owned it, I thought it was a shipper, like STNG. I thought SE was a shipper. Okay? I'm bragging about the stock, the flow, it caught. Right? Oh, yeah, look at this SE. You see, what a great company, blah, blah, blah. I thought it was a shipper the whole time. See, it goes to show you how much I know. But Casey makes, a good point. Some of even the best just traders, right? Quote unquote traders out there, they don't have a clue of what this does. They don't care, right? If they're trading off certain levels or whatever signals they're relying on, right? Stock is just a stock. They don't care anything else that's going around. Everybody knows that story, Khalid. Oh, forget it. Let me tell you something. A lot of people have those stories. Probably got too much pride to share them with you. They want to take too much credit for something they made money on. But I'm telling you, some of the biggest winners, the best winners come from stuff you don't expect. Right? You just happen to buy a name, again, for whatever reasons you may be looking at names. Right? It was just at a great risk reward level, great action. Doesn't matter what they did. And if you think of it logically, right? Think about how I'm handicapping this game, right? In regards to sweeper activity. If a name's going to catch a ton of flow buying, right? Initial sweeper activity, what am I trying to do? Trying to figure out what they do anyway. Right? Like sweepers did all the work for me already. If they are getting aggressive, right, and buying a name initially, building a position in it, what am I going to see that they don't know already? So I guess that's the way I look at it. You guys are too much. So yeah, that's it. What other names? I'm trying to think. Any other names that even I'm keeping up? I'm watching things closely. I'm not even lying to you guys. I don't have. For those of you who hear SMCI, I know a lot of you love the name. I don't think we were on the Thursday webinar when it caught action. November buyer. Do you guys know about that? I know Steamroom members, you guys do. I'm talking about the Thursday regulars. There's no, Shank, I'm telling you, there's no secret watch list. Every time, and again, that's a good measure that we're in a new bull market. If I have a watch list, you don't even need to have the physical list in front of you. I will make you deaf by talking about the names ad nauseum. That's one way to know how impressed I am off the action of the name is how many times I bring it up. When there is initial activity in new names, you don't get me to shut up. You'll see me posting charts on Twitter, constantly. There hasn't been much of it. there hasn't been much of it, period. For a long time now. I mean, we talk about how many, especially these Thursday webinars, how many times have we talked about this guy, SMCI? Because it's one of the few out there. You know what I mean? There's not too many that fit the bill like this. You got some spec names that have had big squeezes and shit like that. But kind of what we're talking about, new growth leaders, right, with solid numbers, and you just, it's like finding a needle in a haystack out there. Needle in the haystack. I wish there were a way to filter what you talked about, sweepers exceeding OR. You can't miss it, Shank. I'm telling you, you're not going to miss it. There's not a lot of it. There just hasn't been a lot of it. You can't miss it when I'm talking about it. Trust me. Trust me. You don't have to look for it. You will know about it. As long as your eyes are open, you will know about it. I'm not discreet about anything. You could tell when I'm excited about action, and that's whether I end up buying it or not. You will know by just the way I'm talking about it, But there's nothing I'm discreet about when it comes to the action. It's almost like I can't even hold it back when action excites me, And as corny as it sounds, that's what I love most about the flow game, right? Being an idea generator. Like, it's hard to explain. It's almost like, for those who know about gambling, I know Steven, obviously you do, right? It's almost like the wise guy money coming in on a game, right? That's what I feel like. Gets the juices flowing. So there's nothing, and that's why, like, on these webinars and the Sunday member webinar, when the market's healthy, when it's a new, fresh bull market, when you're in bull market mode, we're constantly going to talk about names. We're not going to talk about any of this macro shit. The macro shit comes up when we're not in a legit bull market, right? When we're in, and those who were members can verify it for you. When we're in bull market mode, you don't want to waste your time with that other stuff. It only gets in the way. You know what I mean? It only gets in the way. Because it doesn't matter. It just don't matter. Do you buy the same exact call strike and expiration? That's a great question, Sherry. If it's a less liquid name, I recommend you do. You understand? If it's not one of the more active names, I recommend you buy the same exact line that they do. Because the other lines could obviously be extremely illiquid, and that can create problems for you. Even if you're making money, it'd be a tough time getting out of it. In the more liquid names, you really don't have to. So let's say Tesla catches action, right? If you're making a bet on the bet, so let's say Tesla catches action in a strike 2 weeks out, right? And you're impressed by the bet, so you're basically looking to ride the coattails of that bet. You want to stick to that time frame, but you don't have to buy that same exact strike. No reason to. No reason to. Yeah, the less liquid names, not always. Sometimes it doesn't even matter. But it's probably prudent to buy the same strike that they're hitting. More than likely they're hitting that strike for a reason too. So that would be my easy answer for you. The more active names, there's no reason you have to stick to the same line. Yeah, EOSE soon. I played equity only. I played equity only. But to be honest, the reason why I stuck with equity only was more, I would say, not only the stock price, but market conditions too. I'm being dead straight with you guys. A lot of you know I haven't built a position in calls throughout. You guys don't even know how long in a name. You guys don't even know how long. And the reason I stick with, because here's the thing, right? And a lot of people don't know this about me. I'm an equities guy. I've always been an equities guy. Like, people think automatically assume because I look at the flow, right, instead of the equities tape, I'm looking at the order flow as a tool that I play options. And goes to show you, Sherry, to answer your question, many times I play the equity as opposed to the option. So I'm not following that strike. You understand? The less liquid names, like I'm talking about, if the liquidity is really bad, a lot of times I'll play the equity instead, Sherry. You know, a lot of times I'll play the equity. So what I'm getting at, I'm a lot more comfortable with the equity throughout my career as far as managing risk and stuff like that. When I want to be more nimble, obviously I feel a lot more comfortable with the equity. When I swing calls, it's usually when I have conviction in a name longer term, right? So over the intermediate term. And a lot of times I will have equity and calls, right? So it pretty much tells you the conviction. So that's generally, I utilize calls for positions, swing positions. Meaning, a lot of times, the intention is to hold it multiple months. That's my intention when I swing calls. Yep. Anything tactically, almost always, I play the equity. Almost always. But, you know, that's a preference thing too, where, you know what I mean? Don't recommend that for everybody. I've been playing equities for a long, long time. You know, options, I aside from just watching the flow, you know, I'm not that option savvy in regards to the Greeks and all that stuff. I don't dive deep into that game, you know? The allure was by watching the flow. You don't have access to that information real time anywhere else, right? Think of it logically. Like if you learn how to look for the right stuff because there's so much flow out there, right? Where else can you pick up on, you know, hedge fund buying, aggressive hedge fund buying, or speculative buying in a chatter name, or nowhere else? Like you can't. How are you going to look at the equity tape and find that? Impossible. You know what I mean? Ah, Jimmy the Greek. You remember Jimmy the Greek? What a degenerate he was. Jimmy the Greek. Yeah, so that's, but for a kicker, that's generally how I look at it. You know, when I have, and that's why I'm so, I guess not even disciplined, but patient at the same time for swinging positioning calls, because I like to do it when I have that strong conviction. You know, when I feel that I don't need to get out of it because it's down a little later in the day or the next day. Like, I don't like to use the option market for that. All right? When I'm buying calls, I want to be patient, and I also like to leave the possibility to add if it's weaker over the next week or couple days. You know, to add to it. That sort of thing. So you can see how over the past year and change, especially through the bear market, that I haven't had any call positions built because, it obviously wasn't the perfect environment for it. And I like to do it early in rallies. Like, see, this rally from the October lows, I missed the boat completely. I didn't, as you guys know, again, if you're Steamroom members, I don't lie to you. I didn't have any exposure to positions in calls at all. And think of it too, the names that we talk about, right? The names that have been lacking in this bull market that we like to play, a lot of us, the opportunities haven't been there. Right? I'm just not going to build a position in Oracle, or even like an Intel. I don't, that's not my game. It's not my game. Okay, there's money to be made, as you guys see, right? You built a position in Nvidia or Apple or any of these names, you're sitting pretty. But that's not my game. I'll trade those names, and as every dip gets bought and they're seeing sweeper activity, I'll trade them. Mostly the equity, all the time the equity for me. But the names I buy are new growth names. You know what I mean? That's what I like to buy. That's my niche. That's my niche. And as far as that's concerned, there's just not a lot. That's why I come on here too, asking if you guys, sometimes you guys see. Oh, there was a sweep today. Again, we got to see if there was open interest on that line. There was a software name that looked like a biotech name. Was anybody around when I posted that? Anybody remember that today, by any chance? I'm asking you to remember one little sweep throughout the day and some cockamamie symbol. But there was a software name actually didn't look bad, and it caught a little bit of action. I have it written down to check OI tomorrow. That doesn't matter. It's not important. Caught a little bit of action. What else? What do you guys? I'd like to know what the hell you guys are looking at. What are you guys looking at? How about this? I get it. Maybe you guys nothing look too appetizing yet. What oh, here we go. What do we got? Crocs. That's interesting. Let me see Crocs. Wow. This thing was strong as hell too. Damn, look at this. You're getting, lighting up blue here, oversold on a lot of shit. A lot of shit. Uh-oh, what happened here? Uh-oh. Uh-oh, what is this? What happened to Bitcoin? News? What the hell just happened to Bitcoin? Wow. This is interesting. Been playing the he mostly as wasn't super convicted. The he puts? Armin? Wow, look at Bitcoin. What, did that just happen just now? Yeah, that's what it is, right? Bunch of knives out there, exactly. I don't like catching knives. Oh, back and forth. We've seen some put sweeper activity the past couple of days into this mess. Watching TGLS. Oh yeah, I think was it you who mentioned this name to me a couple of weeks back? I think it was Technoglass. Yep. Wow. God damn. Well, there you go, right? You can have your opportunity on it. But kind of to Sahil's point, right now, all these things, you're playing knife catching here, right? You want to see some of these things, even if they reverse, let them reverse and settle in, and then you can reevaluate. Because some of these things are falling out of bed. But this is the problem, Tobias. It's got nothing to do with the stock. I remember when you brought it up to me a few times. This thing is impressive. But, you know, it feels like it's going to continue forever, okay? And you may be up on it, right? When you buy it for another week or 2 weeks, but if you don't get out, I mean, look how much of the move it wiped out. That's why these things become dangerous. They become dangerous. That's why I do it to a fault. Like early on in my career, I made it a point to really focus on not chasing. Like that was one of my no-nos from early on in my career. You know, if a stock got away from me, spit on it, wait for a pullback, otherwise don't even look at it anymore. Because it's not worth chasing. There was so much luck that went into it. You know, because you never know when this is going to show up. And when it shows up, you think you can get out of the way, but it's always too late. Always too late. Joey! What's the story? How you been, Joe? Let me read that. FCX caught, well, it was like short-term action. I think, what was it, September strikes they were playing there? Hold on. I think it was September, early September, something to that effect. But has seen some bull flow, Freeport. Taking a break? Yeah, nothing wrong with that, Joe. How's everything else? You been okay? The market is not going anywhere. It'll always be here. So yeah, Freeport caught some bullish activity. See, this is one of these names that are tricky for me. You know, and there's some flow there, and it's almost like, you know, it doesn't make sense to me unless the market turns. But yeah, what's the play? Let me ask you a question. Like, what's the play on Freeport? Strong economy, remaining strong. And, you know, I mean, if it had a larger pullback, I'd probably like it a bit more if it had a bigger pullback, you know? Hasn't been that much yet. But yeah, forget about me. I'm just giving my opinion. There has been some bull flow in it, short-dated bull flow into September. Personally, I'm not crazy about it. Personally. But there has been some bull flow. Bill, yeah, they had numbers. That's a software, right? Bill, I like this stock. 356 down to 98. Oh, that's not too bad. All these hockey sticks, they're going to remain in the hockey stick. Right, Sahil? Or no? They might be stuck in a hockey stick. But if they trade to the lower end of the hockey stick, they can be played, you know? I don't, to 2022, I don't think we go to 2022. You got to understand, 2022 was a weird year, okay? You had the Fed rigging the game against you. Guys, that hasn't happened in my whole career. In my whole career. You know what I mean? So 2022 was a rare animal. A rare animal. I think it's a question of whether this turns into a new bull market or we are going to where we were pre-SIVB 2023. Does that make sense? I didn't trade at all 2022 either. Well, listen, I won't say I didn't trade. I traded intraday, but primarily only into bear market rallies. That's it. But for good reason. For good reason. You did it right if you didn't trade 2022 on the long side. Because, like, look, you see this? Okay? Here's 2022. These are credit default swaps that we look at. When this is going on, here's January 2022. When this is aggressively widening out to the upside, basically in simple English, the market is doing that. You understand? It's a mirror image of that. So I don't care what you see, how bullish you may be, right? If swaps are doing this, you are not making money net in equities on the long side. Right? So here's the October lows. I mean, exactly the October lows right here. Okay? And that's where credit default swaps topped out and have traded lower ever since. Okay? So this is, to me, if you say we're going to go back to a 2022 environment, that's this. Okay? That was the Fed mechanically orchestrating artificially asset prices lower. That's what happened. What I think is definitely a legitimate probability, a scenario, is that we go into what we've been here. And that's just basically range bound. You understand? Now, again, the major indexes are range bound. Individual names aren't all going to be range bound. You're going to have breakouts. But so here, for the major market itself, we could definitely be. Again, SIVB was the savior of this bull. When SIVB failed, right here, that's what was the kick in the ass. Plain and simple, that got us out of this range. Without that, we still are in the range. So, like, if you put a gun to my head, what I think. Now, disclaimer, I didn't think this was going to happen. Before SIVB went under, you guys remember what I thought the playbook was, right? I didn't think we were in 2022 anymore. You guys know that, right? Post-October, that was it. The Fed stopped rigging the game. That was done. But I strongly believed we were going to be in a range-bound market for a long, long time. Maybe not as long as Drunkenmiller thinks, but for a long, long time. So we go back to the prior SIVB range? Yeah, kind of, exactly. More of a range bound where if you buy pullbacks and sell rips, that's, as far as the major indexes are concerned, that's kind of the playbook. You know what I mean? But I think the better the more effective playbook would be to focus on individual names for alpha and outperformance. So in other words, the major indexes are going to be in a range-bound market, but individual names, certain sectors are going to be in play at times, others aren't. So you could be in a range-bound market overall, but energy may be in a bull market for 3-4 months. You could be in a range-bound market overall, but drug stocks are in a bull market for a quarter or two, 3 to 6 months, right? Like, if you remember, that's what we were seeing, right? There was, like, example, off the October lows, the industrials felt like they were in a bull market. While tech was stuck. You guys remember? Right? So at the October lows, if you bought tech, you were pulling your hair out of your head. But if you bought the industrials, you were making good money. So that's more of what goes on in a range-bound market. Not everything just goes sideways like a dead heartbeat. You understand? What happened with SIVB, you had an event, scared the shit out of the Fed, got the Treasury to react, right? Bail out, stop that problem for the regional banks by issuing that facility, which was a form of liquidity. And what happened? Tech stocks, mega caps broke out. AI caught fire. Is it a coincidence AI caught fire after SIVB? Right? You had the semis explode. All that happened post SIVB. That's why I'm telling you, if SIVB didn't happen, okay, what was likely to happen, we were trading lower because of the regional banks. Then we probably find a low. Here, it was right here. Okay? Here was the regional banking issue. Right? Kind of like this and like this. Right? So going back to last summer, we've been in that range. Call it, what is it, 4,400 to 3,600. And then, boop. So, a lot of people have that take, not a lot of people, but people who are in my camp who believe that SIVB was the catalyst for what felt like a bull market. The thinking is now, unless the Fed does something else, we probably go back to what we were dealing with pre-SIVB. Give it all back here, you mean, right? Very possible. I mean, that's kind of what Sharpies have done, right? They gave it all back. That's why it's interesting tomorrow, right? What goes on here? The Bulls don't want to see this. Whoop. Right? You see this? Like a fall out of bed to zero or below zero, and that's not good. Yeah, but 2022, was as tricky as it gets because you knew what the Fed was doing, right? It was almost like everybody knew what the Fed was. It was artificial, and that was the problem. You had Sharpies cover their short and get long into the summer lows before October, while the Fed was still rigging the game. So how, like, how do you get long for like what we're looking for? How do you get long into that? It was just, even in hindsight, it was tough. Now, post, again, SIVB, I think that was the better entry of Sharpies. Okay? SIVB went under. You had hedge funds get aggressively short, thinking 2008 all over again. You had retail and the riffraff specs get short, and Sharpies did this. Whoop! And the Fed was out of the picture. Actually, they were more accommodative than anything else. You know? So that, in my opinion, was a better signal even than this drastic move here. Because, like, what were you going to do? Like, think again, looking back, it's even hard, right? Into this low here, that's when they aggressively covered that whole short and went long, okay? So then you run into this wall, and if I'm not mistaken, that was Jackson Hole, right? Where the Fed told you they were going to tighten financial conditions. And then this happened. So Sharpies covered and went long, market rallied, but then the Fed artificially was doing this. And then this is where they saw Satan, they looked the devil in their eyes, right? And they took the foot off their brake and stopped tightening conditions. So that put the floor in. Again, the upside was still tough, but that put the floor in. And then SIVB was the kick in the ass. You know? So again, what's different here now, okay, is that you don't, again, as far as we know, you don't have the Fed artificially tightening conditions here. The market forces are on their own doing it. But, you know, we don't know what shows up here, right? Like, the market is probably concerned there's going to be something else that breaks, right? You got currencies acting strange. You got a lot of, right? Because of rates. Yeah, this, again, right, exactly. This is like a normal correction. Exactly. Exactly. Well put. What happened to Bitcoin? SpaceX sold. Oh, they had a position in it? Is that what you're saying? SpaceX? Oh. Interesting. Maybe the Bitcoin plays tomorrow might be a play. We see some flow for intraday. I'm talking. If we're still weak, it looks like Bitcoin's bouncing here, but who knows? This thing's crazy. We'll see tomorrow. I mean, I tell you, we need something intraday on the call side to get me excited. It's been kind of dull. But kind of like the points Drew is bringing up here, that's what's got me pretty excited about. And you guys know I've been kind of giddy for the past couple weeks. I think we're going to get some legit answers out of this to what we have on our hands. And then once we know what we have on our hands, we can act accordingly. You know? Are we in that range bound again? Right? Then we'll start to see selective buying in certain sectors. You know? If it's a risk-on bull market, like if it's a legitimate bull market, we are going to start to see new leaders born here. This is what they're born out of, these pullbacks in a bull market. You know, maybe Shank is onto it with one of a name like this, right? So you see stuff like this that holds up better or just hangs in there and then buyers come after it aggressively. But the mega caps, that's not how it works. That's not how it works. Again, not to say that the market can't go up for a period, but that's not how new bull markets work, according to history that I've been a part of. Right, yeah, like, see, these names, like, that's what we were saying when these names were hot. You telling me these are the next bull market leaders? Or Carvana? Come on, give me a break. You know what I mean? Like, these are not new leaders. These are hockey sticks that just have been aggressively shorted and have bear market rallies. They don't go straight to zero, right? So in this portion of the hockey stick, you get a pretty wide range with big squeezes and crashes, and in between. All right, here's your hockey stick. I mean, that's Ovechkin style right there. Boom. No, Shank, Praveen Shank likes a net he was talking about. That's a name he's eyeing for flow. It's holding up well, which it is. Oh no. How do I do this back? I removed indicators. How do you do it back again? Hold on. No. No. Hold on. I can do this, I think. God. I start pressing buttons, I'm deadly. Oof. Okay. Control Z. Oh, okay. I just reset it. Oh shit! You get Joey. You got Super Scion Blue starting to light up here. Look at this on ES. I didn't see it on SPX. I guess on ES. Wow. Damn. I mean, you're pretty. This is oversold here. You're talking about here. The last time we had Super Scion Blue, this is what we call that oversold signal here. Okay? You got to go back here to October. Prior to that, oh my God. COVID. That's nuts. That's pretty insane, huh? Wow. Yep. So I mean, you definitely set up. Damn, I'm talking about just a snapback squeeze like this, guys. You know what I mean? Just even to there. This indicator is called MS. It's an oscillator like. The Blue Buffaloes. Joey, who I was just talking to, nicknamed it Super Scion Blue because the way God Almighty, the way I had it set up in the Steamroom, because I show the chart in the Steamroom. Hold on a second. How do I move? This lights up blue. You see the bars? But yeah, it's a pretty, again, it's an, oversold, overboard indicator, but it's pretty cool, The visuals of it's pretty cool. Gives you an idea of where you're at. But yeah, we're definitely set up for a snapback squeeze. So ideally, like tomorrow, guys, if we see a nice band of sweeper activity come in, and you got credit cooperating, right? I'm definitely going to be shouting that out. It's worth an entry. If the rally fizzles, you stop yourself out intraday. You know what I mean? It's not the end of the world. We definitely want to look for an entry tomorrow, though. It's crazy. I didn't realize like that. I knew we were oversold. I didn't realize that oversold. I hate, kind of like what Sahil was saying, I hate catching a falling knife without confirmation. The only time I like to do that is in a bull market, but options, you can manage your risk accordingly, so that's good. Bitcoin, I don't know. I haven't. See, for me, like positioning and sweeper activity is all I rely upon as those confirmation signals. In Bitcoin, I don't have that either. Well, actually, Bitcoin has decent positioning stuff you could get from, what's that outfit called? They really dive deep into it. If I traded Bitcoin, I'd be all over that shit. What's that outfit called? They got some incredible stuff. That you could get all the positioning stuff for Bitcoin, all the crypto. You guys know what I'm talking about. Forgot the name. My mind goes blank. It's the cyan blue. But yeah, that's Bitcoin. That's the problem. I don't play Bitcoin. I don't get excited about Bitcoin. I can't. It's like trading one index over and over and over again. I'm not going to trade the other coins. Oh, Ramon, you got to know it. Hold on, guys, help me out here. What's that? They're on Twitter. They're all over the place. I think you could get some stuff on TradingView from them too. Who's the outfit that has all the sentiment and positioning stuff for crypto? They got the coolest charts. God, what's the name? Yep, Glassnode. That's it. That's them, isn't it? Glassnode. Isn't that it? I'm almost positive that's it. I'm almost positive that's it. Why, Ramon, do you use them? I was looking at some of their shit. I wanted to start trading Bitcoin just by looking at some of their shit that they had. Tesla? What's Tesla? Yeah, Tesla is pretty oversold here too. You see, like in names, you could get Super Scion Blue, and sometimes, well, it depends. If it's bad news, it can go right through it. But if it's bearish, you get kind of this, a little relief, and then it can just roll over. Microsoft. Yeah. But, the problem is this, what bothers me on these things. I can't make the argument of oversold when this rally to me was ridiculous. But I get it. Usually you should find some support here, right, for a bounce. But everybody sees this. I see this, right? This thing. I mean, that's. Oh, what the hell did I do? That's the problem I have. Again, I don't know if it's the right way of looking at things, but I can't really get into this, right? It's not that appealing when this just happened. That's the problem I see. Yeah, exactly. Exactly. Like that's you should at least get some stability. Right? Like see even here, okay? Like this was oversold here and here, okay? But like at least you can make the argument. I mean, it's sold so much already that when it does find some buying, maybe you get, there's some upside there. Or I should say the damage is not that bad to the downside. Here, like, after a bounce, it could continue lower. Like, what? This move is insane. I don't. These market caps on these names, I don't. And that's the argument to a new bull market. Like, are these the names? These are the names that are going to keep going higher? Is it possible? Of course. I mean, where are these things going to go to? Now, if you told me the Fed was printing money and they off COVID, they're throwing in the kitchen sink, I'd say, listen, I don't care what their market cap is. With the Fed printing the way they're printing, these things can go to the moon. But that's not what's going on, But yeah, you got to look for, I guess, trades in these things now. Again, not my game, but for those of you who trade these things. Yeah, I know. And there's no new leadership, and the market had a big rally. So, it can cost you. There's definitely opportunity risk. But for a new bull market, right? Oh, what did I just do? A new bull market that will continue. You gotta have new leadership somewhere. You gotta have new leaders. That's what fuels that run. That's what is the gas behind that move. You get new names that do this. Like Microsoft, Nvidia, Apple is going to carry a whole new bull market. I don't know. That would be something new, Again, the big guys can lead, but it almost always ends badly. You know what I mean? Doesn't usually turn into a bull market. It ends ugly. When you get new growth leaders, and think about it, right? That's like a lot of people are focused on a lot of the old leaders and the old names, and they're not doing anything crazy. And that's how, they fall asleep on a new bull market. When it's obvious to everybody that Nvidia and Apple, the only two stocks that are going higher, always ends badly. Always. So again, we're gonna get these answers here, right? So that's what's good. We're gonna get these answers. We're not gonna be waiting around a long time to get these answers. So that's why I think it pays to be a little patient here, and right, find trades, just manage your risk, And I think we're going to get a good idea of what we're dealing with sooner than later. Everything went parabolic in COVID. Some of the stocks that have been hockey sticks for a year or so, now can't they start to turn around? Usually, Damon, they can rally, but usually they don't become the leaders they were. You understand? So you go through a period where they rally, but a lot of times we talk about it like, again, the hockey stick pattern. If you guys remember, those of you who were on the webinar, when this was going on in 2022, remember I pointed out to you that a lot of these names are going to end up in that hockey stick pattern for a while, for a long time. And what happens is they stop going lower and they trade in new ranges. And what you start seeing, you see them popping up on new high list, but not all-time highs, new 52-week highs. You understand? Because they've been in a range down here for so long. But usually, this is how it resolves. You understand? This is how it resolves. And then when a new bull market starts, okay, new leaders like SMCI break out and they start looking like all these old shops and all that. So you got a whole new batch of new leadership on the growth side. And what these guys do, they bang around, right, down in hockey stick formation, and then eventually, as the bull market goes on, some of them start creeping higher. You understand? Some of them will start creeping higher. But a lot of them will be left for dead, down here dangling dead. Right? Like, think about when the NASDAQ bubble blew. Some of them survived, right? A few of them thrived. The majority of them left for dead. And, there's a reason why that happens. You think about it, right? COVID, everything, if you remember, people thought it was a new generation of things, right? The stay-at-home shit. Everything was based stay at home. People shop online. People don't go out. People order food. People do Zoom. People, like that was going to last forever. Right? You had Zoom running, Doku running. Okay? We're not in that anymore. We're not in that type of bull market anymore. Peloton, right? No one's going to go to a gym. So that was behind that new bull market move. You had new leaders based on what people thought was a whole new generation of things that we were dealing with. Same thing like the NASDAQ tech bubble was all based on the internet. The internet, everything. It got to a point where companies were just putting .com onto their name, and market players were factoring in upside based on the business they're going to bring in just on the internet. Right? Then that runs its course. It crashes. That bubble pops. All those .com names don't end up re-emerging as new leaders. There's a new technology, or right, the mobile phone. Right? There's something else that comes out. Yeah, fintech with the PayPals, right? In a bull market, they look like it's going to last forever, but it just doesn't. Square, all these names. So now, like a lot of people think it's going to be AI driven, right? All right, fine. Give me, where are the names? Don't keep telling me NVIDIA. Where is it, right? Usually they're components, subsectors of that sector where new leadership emerge. I'm not saying it's not possible, but we'll see it. We'll see it. If you're looking for it, you'll see it. We'll see it in the flow, especially as institution and funds position in these things. Right? They pick up on it. They're visiting these companies. They're talking to their company. They know their product. They know their software. They know where they're doing all the legwork. Then they're sweeping calls, building positions. We'll see it. Right? We don't see it. Right? We see SMCI. We see Nvidia. What else? There may be new software names like I don't know, like that name. What's his name mentioned? Technoglass. So, but you'll see the new leadership. We're going to see flow. You're going to see the price action. You're going to see it as it develops. But it's again. I'm not saying every so. There could be an outlier. Maybe Shop ends up becoming a great company again. It's one of the few that survive and thrives. It's very possible. I'm not saying, but more than not will not. They will sit and languish in hockey stick mode until they die. IPOs, good call, Damon. That's another place they come from. Great call. Where we've had an IPO drought, right? The IPO market dried up completely. The couple of IPOs that came out were energy names. But good call. That's where a lot of them come from too, early on. So again, it doesn't have to be new names that you never heard of before. Like Nvidia, you guys don't remember. I told you about my buddy who owned Nvidia when that stock was nothing. People knew of Nvidia, but nobody was excited about their product, their technology, or anything like that. That stock was a dog, did nothing. And then it became a new leader. So it doesn't have to be names you never heard of before, but usually they're new names that haven't exploded yet off a different bull market. Kava, we saw a little bit of flow in it, right after the IPO. Kava had a little pop, and I see now it's come back down over here. But yeah, right? So exactly to your point, names like this, right? Because not many people are paying attention to the IPO market. We'll start to see some aggressive buying coming into Kava, right? And then a couple days later, they start adding more Kava. And we're like, oh shit, what's this Kava catching all this action? Oh, interesting. Okay. And then next week, you start to see another name that almost looks exactly like Kava, right? Similar sector, and starting to see flow, right? And then you start to pick up on those patterns. And little by little, there you go. You start to see new names, new growth names that people are getting excited about. They're not rotating from the industrials to the financials to big pharma to energy, back to the industrials, to big tech. It's almost like they're playing ping pong between sectors. That's a range-bound market. Yeah, I don't know if you remember. I remember Nvidia. This was a stock, like if I told you I was going to buy Nvidia for a trade, you would laugh at me. That's how bad this stock was. It was so bad, guys. So bad. This thing did nothing for so long. And then, 2016, it's not like all of a sudden everybody started to say, oh, Nvidia, it's the next leader. But little by little, you started to notice things. You start to see the flow pick up. You start to see the price action in an uptrend. You start to see volume pick up. So Yeah, I don't want to overdo it. The whole market doesn't have to be about that. You have old leaders that can do well. You know what I mean? You have names that are widely owned that still find uptrends and make money and get hot at times. But the fuel behind a new bull market is almost always new leadership. Almost always. Almost always. Oh, forget it. The doom and gloom shit, don't pay attention to. They do it to get followers, tweets, likes, and all that shit. They're all brokesters, the doom and gloom crowd. Even when they're right the one time in their life, trust me, they didn't make two cents on it. All they do, every downtick is doom and gloom. Every downtick. They finally felt like they were right in 2022, and then they got trampled anyway. Trust me, they're useless. Listen, it's not, you don't need to be Einstein, right, to figure it out. This is what the market does. Big picture. Okay? If you're going to pick a side, right, if you're going to pick a side, bullish or bearish, always pick bullish. Even when you're wrong, you'll get away with it more. Right? Think about the bears. They find this is 1, 2, 3, 4. That little time span, that's where they're trying to gear up and make all their money. Right? Like, what are you, Houdini? You're going to figure out what times exactly are these particular times where you can make some money? Getting excited on the bear side? I'm not saying be a stupid, ridiculous perma bull and just keep buying on the way up. But corrections, especially corrections, are almost always the best opportunities. Almost always. There's the rare occasion you run into 2000 and 2008 or 2022 when the Fed rigs the market. But more than not, they're the best opportunities. Now, it's one thing to be cautious, and it's another thing to be these doom and gloom perma bears. The world's always coming to an end to them, right? They live in their bunker 24/7. Yeah, they always, right? See, they always find something. There's always something that they can hang their hat on. Credit cards, the housing market, this, that, the other thing. And don't get me wrong, I get it. I saw what happened in 2021 when it gets into a frenzy. Okay? That's got to get washed out. I understand. But it doesn't mean that every year is going to be a 2008 style event. There's an in-between too. So that's what I mean. Every downtick, they get all buried up. And that's kind of what we're looking for here. Let's be honest, right? We want to see this rinse reel in enough bears. That's it. That's the main goal out of this right now. No? Am I wrong? The main goal here is we want to get enough bears reeled in. That's what we're trying to do. That's all we're trying to do. Sometimes bears are more stubborn, so it takes a little more work. But that's all we want to do. That's all we're trying to be patient for. But it doesn't pay to be doom and gloom, look, everybody, I saw people go from 500 followers to 200,000 followers in 2022 being doom and gloom. And then by the time those 200,000 followers started following those doom and gloom guys, they got run over in October. You know what I mean? Just when they started to follow that doom and gloom plane. Drew, I preach off my rocking chair, I've been around the block, Drew, you know that. I've been around the block. I've seen how these people operate. All kidding aside, the doom and gloom guys, for the most part, all they do it for is for the draw, the attention. Right? Doom and gloom, for some reason, it gets people attention. It draws interest. People like to hear misery. Misery likes company. I don't know why that is. You would think the opposite, but that's how they sell. Newsletters, Substacks, all this stuff. You go out there and you sound as bearish as you can, and you're going to get a good amount of retweets and likes. That's what they do it for. What are you going to say? You're going to go and say we're in a range-bound market? Nobody would be interested. Right? Who's going to be interested in hearing that? These shysters. All right, my friends. I'm going to wrap it up. All right, so let's see what we got. Hopefully by, well, maybe it's a stretch next week. But next week, hopefully we have some more information. I'm hoping at least we have a few names to talk about come next Thursday that we've seen some buying in. You know, maybe we've seen a bounce by then. We saw a little bit of buying. And at least we can start to build a watch list at the least. Maybe more, but we'll see. You can tell new players in this game when they're bragging about money on the... Oh, hell yeah. All right? Without a doubt. Without a doubt. Anybody who's been in the game is too humble to brag about money on... Anybody who's been in the game is too humble to brag that they're even betting on downside. Forget about money they made on downside. The market gods will rip you a new ass. Yeah, here's the thing. That's a good call. The put-to-call ratios, again, just when they started perking up, we started to see those big ARB put blocks again. So they kind of skew the ratios. But it's a good sign that they're perking up anyway. You know, it's a good sign. There's definitely been elevated put buying, especially the zero expiration and shit like that. There's been, I think, what was it, Goldman had a note on it yesterday? That heavy put buying in those zero expiration strikes and all. You know, but all the time, every time, like I start to pay attention to the put-to-call ratios, which I like to do in a pullback, I see that those mega blocks come in and they're useless because they're not bearish bets. You know, there are blocks and they're completely useless and they skew the put-to-call. But if you get a big enough push on the put-to-call, it gets the job done anyway. I'll give you an example here. Or is it PC or PCE on here? PCE, right? Oh. So, like, for example, this spike here were those R blocks. But it was elevating even before that, you know? So you could see the trend going higher. But you could see, right? We were starting to lift even before the R blocks the last couple of days. So again, tactically, we're already set up for a squeeze. You need confirmation of the turn here. That's what we're looking for. Yeah, that zero expiration, these things, I don't know how they're not going to be the death of the market one day. Some people who are a lot smarter than myself say it shouldn't be a problem, but they scare the shit out of me, all these things. You know, they scare the shit out of me, but there's been crazy volume. I posted, I don't know if you guys saw it on my regular Twitter. Hold on. That chart, didn't I post it on my regular Twitter? Oh, jeez, this is going to take 6 years to open. Look at this, spinning wheels. I see that in my sleep, spinning wheels. No, CoinFlow was, it caught some short-dated buying. I think it was for August 25th. Caught a couple sweeps. If you remember, they played weeklies a couple days ago, and they caught some news. It was a little bit of a pop. So I don't know, you know? It's not big action for Coin. I mean, Coin could catch some big action. you got to be careful in this atmosphere with some of the more active names seeing a little action. If you like the name, you like the spot for a bounce, you take a shot, but I wouldn't go crazy. Where's the, here. So this is the opposite of a put to call. This is put a call to put, zero expiration. All right? So think of it the put to call, but upside down. And look at this. This was SIVB. That was the beginning of the year, that crazy spike, which was a little skewed. So as you can see, pretty aggressive. No, Coin you're talking about, Oscar? Coin, they bought August weeklies, and they, if I'm not mistaken, I think they closed them. That was on, what's today, Thursday, Wednesday? They bought it on Tuesday. Then they closed them on Wednesday. Today, they were playing August 25th calls. I think they were at the money. But again, bounce action. A couple names, so right? Apple saw a little bit of bounce action late in the day. Again, nothing noteworthy by no means. You see it. Like even we saw, if you remember Microsoft action, like that was half decent bounce action. We saw that one day. When was that? Monday? I'm losing track of the days. But just make sure you're using it with something else. Like, right? What I mean is, you see that type of Microsoft actions, half decent spec action, you like the spot already, or you're looking at the spot for a bounce. Then you kind of play off that. Because it's not quote unquote real buying, as we like to say. It's speculative action. And the problem becomes when you get into this type of environment in a downdraft, you don't know what's what. Is there a short looking, somebody shorting, hedging with short-term calls? There's a million different things that can go on. So those more active names, you want to see them get bombed. All right, so let's see what tomorrow brings. Again, we're just looking for the turn here. We're looking for confirmation of the turn from credit and some sweeper activity. And then again, on an intraday basis, we'll take some shots. There's nothing wrong with taking shots with a stop, especially intraday. All right, and then big picture, I told you guys what we're looking at. We're looking at Sharpies and hedge funds here. We're keeping a close eye on them. And we get Sharpies mañana, tomorrow before the close, Sharpie update. I'm excited. I'll talk to you guys tomorrow. Everybody have a good rest of the day.